Okay. Very well. So let us continue. Okay. Okay. So now we were told to um okay. So we were told to calculate risk adjusted cost of risk adjusted cost of capital. Okay. Now, step one, we are still going to get proxy. Okay. So for TP projects now, calculation. Okay. Calculation of risk calculation of risk adjusted WACC. Now, first step, proxy. So go back to the proxy information, which is Abaco PLC. What are you seeing in Abaco's case? We are seeing that the first thing they told us about Abaco is that Abaco does maintenance of agri and maintenance for construction and mining equipment. So construction and mining equipment, they are non-agri. Then agri is agri maintenance. Okay. Now you don't say about 15% is in the equipment maintenance, in the agri sector. So the first thing we saw is the portion they said for Abaco and portion of non-agri. Portion of non-agri is 15%. If portion of non-agri is 15%, and Abaco does two things, that means um have it? Yeah. Okay, sorry, the portion of agric is 15%. So if portion of agric is 15%, that means the portion of non-agric of the portion of non-agric will be 85% because they only have two activities. So you can see we are getting the 85% on our own based on what examiners give. They gave us the beta equity. Beta equity of Abaco is 1.6. Then they said what again? The beta asset of non-agric is 0.8. Beta asset of non-agric is equal to 0.8. What else do they have? They said the share price of Abaco is 4 naira 50 kobo. The value of equity of Abaco is 4 naira 50 kobo. How many shares do they have? They have 80 million shares. So that is what? 4 naira 50 kobo times 80 million. We got 360 million. Okay. The value of debt for Abaco is what? 1,050 per 1,000. That is 1,050 per 1,000 times what is the nominal value of the debt? 340 million. 340 million equal to 1050 divided by 1000. That's times 340 million. That's 357 million. That is the market value of debt. Beta debt is 0. Tax is how many percent? If you come back to the last paragraph, tax rate is 20%. Okay. Market risk premium 6%, risk-free is 4%. So let us move on. So we've gotten everything that has to do with proxy, right? Then go to the next slide. Let's get step 2 done. Now we are having step 2, which is on gear. Why are we doing on gear? Because they have given us equity beta. Now we are going to calculate asset beta, which is beta asset. It is equal to beta equity times value of equity divided by value of equity plus value of debt 1 minus t. 1 minus t. Okay, plus 0. The other side is 0 because beta debt is 0. Okay. Beta asset, it is equal to beta equity is 1.6. Value of equity is, what did we get? For value of, we got value of equity for Abaco is 360. Value of equity is 360 and value of debt is 357. Okay. 360 divided by 360 plus 357, 1 minus 0.2, which is tax rate. Okay, now, so here, what we have, what is now going to be our beta asset? This beta assets we are going to be calculating here is the combined beta asset, because the 1.6 beta equity is combined beta equity, because they just said the beta equity of Abaco is 1.6. So they didn't say whether it is the 1.6 is for agric or non-agric. Look at it, they said 0.8 beta asset is for non-agric. So they didn't say something like that for 1.6. So it means that 1.6 is the overall combined beta equity. So let us do that. So the beta asset we get from it will be known as combined beta equity. Combined beta equity. Okay, we're going to have 357 times, I'm doing the denominator times 0.8. That's 0.8. 0.8 is 1 minus 0.2. Okay, plus 360. Okay, I'm going to say 1.6 times bracket 360, close the bracket, divided by answer. So I got 0.89. 0.89. That is our combined beta asset, because we have used combined beta equity for it. Now, thank God we have gotten combined beta. That's why we even calculated beta asset first of all, so that we'll be able, because they are giving us the beta equity of the other side, which is the beta equity of non-agric. So inside the beta equity of non-agric 0.8, it is inside this 0.89. So we have to now separate it. You remember the formula I gave for combined beta asset? I say combined beta asset is the beta asset of activity A times portion of A plus activity B times portion of B plus activity C times portion of C, and so on, depending on the number of activities they have. So combined beta asset is 0 points. Now, the next thing we want to do is, still in on gear, we want to do separation of beta asset to get beta asset of agric. Okay, so combined beta asset is 0.89, which is equals to, let's the beta asset, let me go back here. Let the beta asset of agric be 0. Beta asset of agric, let it be x, not 0. Let the beta asset of agric be x. So if the beta asset of agric is x, I will say x. What is the portion of agric? 15%. What is the beta asset of non-agric? 0.8. What is the portion of non-agric? 85%. So solve for x. So this will be equal to 0.15x plus 0.8 times 85%, 0.85. That's 0.68. Okay, so I have 0.89 equals to 0.15x plus 0.68. If I collect the like times and solve for x, it's going to be x would be equal to 0.89 minus 0.68, all right, cross to just here, divided by 0.1. Okay, so let me continue. So that was my internet there, I messed up. Okay, so let me continue. So we have the last equation I had was 0.89 equals to 0.15x plus 0.68. Okay, how did I get 0.68? I did 0.8, which is the beta equity of non-agric, times portion of agric, which is 85%. That's 0.85. That's how I got 0.68. 15% is the portion of agric times x, the beta of x is beta of agric. 0.89 is the combined beta asset. Okay, so solve for x. It will now be equal to 0.89 minus 0.68 divided by 0.15. So what do we have? Okay, 0.89 minus 0.68, okay, divided by 0.15. I got 1.4. That 1.4 is the beta asset of agric. All right. So that is the beta asset of agric maintenance. Okay, very quickly. So here, so now we have been able to get the beta asset of non-agric. If you look at it, it looks like we went into a little bit of that where I say we want to calculate overall beta, where I have 7 steps, but we are coming back. We are actually using 5 steps. Okay, please just pay attention. In the ungear, what did I do? I ungear. Why did I ungear? I ungear before I separate the betas, because examiner has given us the beta of non-agric, beta asset of non-agric. If examiner had given me beta equity of non-agric, I would have, before I do ungear, I would have separate the beta equity. You know, the 1.6 is a combined beta equity. I would have separated the 1.6 into beta equity of agric, beta equity of non-agric. Then I will now ungear beta equity of agric and get the beta assets of agric. So So meaning that if it was beta equity of the other side, that is in this case of non-agreed examiner papers, we will do the separation first before on gear. But because they gave us beta assets of the other side first, we did on gear first of all, then we now do separation. Okay, so we are still in step 2. So step 3 now, re-gear. So step 3 re-gear, which is beta equity equal to beta asset plus beta asset minus beta debt, value of debt 1 minus tax divided by value of equity. So therefore, beta assets is equal to, beta equity is equal to what you get? Beta assets is 1.4 plus, open a bracket, 1.4 minus 0, beta debt is 0. What is the value of debt? Now, this time around, we are not using the value of debt of proxy. We are using the value of debt of the company we just calculated. That is Abaco PLC. Now, there is always a way somewhere that examiner would say that we are assuming that the market value of the company current, the portion, the gearing of the company currently is going to be the same thing for the project. Okay, that's our assumption. That is why we are going to use the market value of TP here. What is the market value of TP that we calculated? Okay, 1021. Let me remember again. 1021 divided by 1000 divided by 1021 divided by 1000 times 760. So 775. This is 775.96 divided by 1845, all in million. 1 minus T, 1 minus 0.2. Okay, so that's it. So what is our beta equity? Okay, so we have 775.96 divided by 1845 times net of tax 1 minus 0.2, that is 0.8. I have this. Then multiply by 1.4 to expand the bracket times 1.4. I have this. Then add it to 1.4. So this you have to follow the log in case. So I got 1.87. 1.87. That is the beta equity. Then we move to the next step, which speaks to capping. So we are saying capping, using capping, what's the formula? Cost of equity of a geared company equals to risk-free plus beta equity market return minus risk-free. This is the risk premium. What is the risk-free rate from the question? The risk-free rate from the question is 4%. 4% plus the beta we got 1.87. What is market return? No, they gave us market risk premium, which is 6. So our cost of equity of a geared company is going to be 1.87 multiplied by 6, okay, plus 4. That's 15.22%. That is our cost of equity of a geared company. Then we move to the final step, which is the WACC. The 5th step. Now, what's the formula for WACC? Is equal to KE VE divided by VO plus KD times VD1 minus T divided by VO plus and so on. Okay, what is our KE in this question? Our KE is 15.22%. What is our VE? 1845. What is our VO? Before I write that VO, let me quickly write KD. What's our KD? 4.8. You remember, this is the 4.8 we use when we're calculating the market value of bond. This is the yield that we used. Okay, then 7, what's that market value of debt again? 775.96. 775.96. 1 minus tax 0.2 divided by, so let me say 775.96 plus 1845. Okay, that is 2620.96. 2620.9. So that is 2620.96 is our total market value of the company. That is our VO. Okay, very quickly. So solving the equation 1845 divided by 2620.96 multiplied by 15.22. I'm getting here 10.71, then plus the other side for debt side 775.96 multiplied by 0.8 equals to this, all divided by 2620.96. 2620.96, which is equal to this, multiplied by 4.8. We have 1.14 approximately. Okay, so equal to 10.71 plus 1.14 equals to 11.85%, approximately 12%. So 12% is our WACC, risk adjusted WACC. We got 12% again. All right, so that is how we solve this type of question. And so please, I want to appeal that please you look at this question very critically and resolve it. And I want to give assignment based on this. Please, I want to recommend that you go and solve ICAN November 2014 question 1A. Please try it. Okay. Okay. So now I'm going to also make us solve another question. This question will help us to learn about capping again, which is having that 7 steps. That is calculation of combined company work or work of combined activities or overall work. So it's really going to help us to do that. Well, that's what we are going to learn in the next video. So in the next video, we're still going to question. Thank you very much. And you will hear from me in the next video. Take care and God bless you. Cheers.